Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was, we're going to see a couple things. First and foremost, we see that all three major indexes rose for the week. Actually rose pretty nicely. And we saw an end to some of the selling that we saw in the month of May. The key weeks of the event, well, not really much that happened. Again, the market did reverse the selling in June. We had an early selling going on at the beginning of the week. We ended the week up for the week. Financials led the way. They were up 5%. And we saw oil hit a 2012 low of $82 per barrel. But you can see we really didn't have a lot of news this week. And of course, you know, I am a Mac addict. We do have Apple's WWDC starting this upcoming week, so any news about the iPhone might cause a little stir to the market. But overall, we saw a very blasé week. Now, when we come to this week, we see, again, we're not going to see earnings until July. We're still at the end of the second quarter here. And when we look at our economic data, we don't really have much. I mean, you got consumer sentiment on Friday, but there wasn't much going on. And even the, as you guys know, I go to Forex when I don't see anything here. And even all of the bank announcements in Forex of last week really didn't move the market. Now, what could possibly affect Monday's trading is the banks in Europe are getting together to talk about Spain's debt crisis. So we've moved from Greece to Spain. So that might, jar the market for Monday's open. And of course, anything about the iPhone could jar the market a little bit as far as anticipation. I mean, look what the potential release of the iPad 3, the new iPad, did to the market. So that's out there. But again, we know our mantra, sell and may go away, is the stereotype of the market. So, we've got to be careful if we're looking for these big trending up moves or down moves, because the market needs the volatility and liquidity, and some of the big players obviously have gone for the summer. So again, I just always want to remind people about that as you're looking for positions. Again, I always say the key is to understand your targets, and it's also to understand the market environment, and so that you can truly place your targets. You shouldn't be looking for big targets if the market can't give that to you. Let's put up the charts and take a look. As we start out with our market sentiment leaders, the dollar, gold, and crude oil, we can see a couple things. We did hit this new higher at 83.67. You can see our support around 82 did hold up here. We also have the 20 moving average here acting as support. So we have a new range that we're watching, 82 up to just above 83. The dollar is definitely sideways to up. And you can see really on our point of control where this 82 really held up here as support. Going over to gold, where we've been saying sideways to down. We can see our 2012 action hit a low here. All these wicks down here in this 1535 price level. We came up, got back into our range where we like to be at this 1600 to 1660. But you can see what was support here, a lot of wicks in this 1640 range, acted as resistance and pushed us right back down. And now we're back in that 1600 to 1500 price level. So we'll go sideways. Just say sideways on gold. We'll finish off with crude oil, which, as we said earlier, hit a 2012 low. Actually, before I highlight that, let me zoom back out. Sorry. And you can see what we were watching over here, where we got these lines that we drew in here. And now, as I zoom in, you can see what happened with that price action. We said last week that we expected to see some support here in this 80 range. We got a little bit early at the 82 price level, and now we're going sideways. So crude oil is definitely sideways to down. As we look at the S&P 500 on a daily chart, we can see a couple of things. Last week we talked about the 200 moving average and whether or not a market would defend it. And we can see for the most part this week we did as we rally back up. But now we're back up to what was once support here at 1330-ish. Is now going to be resistance. You can see as we came down, tested the 1300, tested the 200 moving average, we came back up and found resistance at 1330, 1331. Now we came back, tested the 200 moving average, and here we go back up. We already have one failure here, and also notice that right above here we have the 50 moving average also acting as resistance. So that's going to be our key price level to watch, 1330. And also we can see we're starting to see a new channel forming here in that 1330, maybe 1275-ish range. And, as we enter summer months, as we talked about earlier, what's going to be our catalyst to get us out of this range? And should you be adjusting your trading status based upon that range? Well, we'll find out. Of course, we were oversold, but now we're coming out of oversold, and we're pretty much in the middle of the range here on the daily. As we scroll out to the weekly, we can see how bad that month of May was for the market, coming right on down. And it's nice to see that we really took back much of the last week of May's price action back. But we do have some moving averages up here as resistance on the weekly, but again we have this 1335, 1330ish that we're watching. We'll go out one more time to the monthly and zoom on in. Again, the month of May, big candle, trying to see how we can hold up here for June as we enter the first week. So far so good. We did not come down and test the 50 moving average. That's good. But our indicators are in the middle of nowhere, a little bit overbought here on stochastics. Switching over to the NASDAQ, going back to, to the daily is what I'm trying to get to. And we'll zoom in on our 2012 content. And we can see that we have 2865 acting as resistance here. We hovered right around here during the month of May. Came down, tested the 200 moving average. We also tested 2740-ish in that range. And now we've come back up, and there's that resistance again. So you really can start to see the range forming here on the NASDAQ. Again, 2865, 67-ish versus 2745-ish as support. Our indicators here on the daily are coming out of the oversold into the middle. Come back to our weekly. We can see that month of May and how lovely it was for the market right there. And again, just like the S&P 500, the first week in June here has recaptured the last week in May, sitting right at the resistance 2865, 2867-ish. Go out one more time to the monthly, and we were coming out of oversold on the daily. On the monthly, we are also coming out over. So we have a little bit of a dual time frame agreement there, just a little bit. We had an opportunity there this week. This month. And what we're looking for, though, as they start to get in the middle of nowhere here on the NASDAQ, is again what's going to happen here at this 2865, 2870-ish price level. So overall, we're starting to see a nice tight range, and definitely, it would be great to catch that break. Remember, we have the 50 moving average right above us here on the NASDAQ, but a nice range is starting to form here for the NASDAQ, and we definitely want to watch the break. And you can see our breaks. If we break above, we want to head up to 3,000. If we break below, we want to head down to almost 2,600. As we come to our market leaders, we want to start off with Apple. Of course, Apple has a beautiful up move here. Most recently, we've been in a short-term downtrend. Now, if you were to look at it, I would say we're probably sideways. Of course, again, as we've talked about so often, this week is their developer conference. So there's some potential movement there, especially with any announcement about the iPhone. But you can see a nice little 550 to 580 range that we're primarily in, popped out of it here. And now it's really acting as resistance here. So we'll have to see sideways for Apple, maybe even sideways to up. What about Amazon? Zoom on in here. Amazon had earnings, gapped up, pulled back a little bit, found support at the 50 moving average. Now back at this resistance of 220. For right now, I'm just going to go ahead and say sideways for Amazon. It's got out of the downtrend a little bit, so the month of May wasn't that bad for Amazon. Facebook. Facebook, as we talked about, our channel, You Make the Call, talks about Facebook. We're going to have another one coming up here in about 2 weeks. This week, as I said, we're going to talk about Google. So, sideways to down on Facebook. We'll go down here to hourly since we don't have a lot of candles. You can really see it. Certainly down. There's our sideways. Found some support here around 25.50-ish. That's our low. Still have the resistance of the 50 moving average. I know it hasn't been 50 days, but we do have 50 candles. So there's some resistance in there. Sideways to down for Facebook. Google, as we just said, we hope to have our Google video up on our You Make the Call stocks channel for you. You can see some sideways price action. We did break below the 580 support here. So we're out of that 586.20 range. We did find support at the 500 moving average. And we're just sitting here. So sideways for Google. Goldman Sachs, which gave up the ghost. Gave all of that price action back in 2012. And now trying to find support at 90 and getting back into this 94 to 100 price range. So sideways to down for Goldman Sachs. IBM, which has been a very positive stock for us, but gave up the ghost a little bit. It found support at the 200 moving average, and now it's in this 190 to 195 price range. So sideways to down maybe on IBM, sideways. Intel also usually follows IBM, and we do see a little bit of that here. It found support at the 200 moving average and at 25. Now it's in the middle of the range of 25 to 27. But notice though, over here, back in February, we had a lot of support at this 2640-ish range. And that's where we're potentially finding resistance now. So this 2650 will be key to get up to $27. MasterCard. MasterCard was one of our good charts. Like Apple, you might say it found a nice little double bottom here. We might see a breakout here, potentially to the upside, although this candle was its best shot and we pulled right back from it. So we got a gap up and sold off. You could say, you can argue that 420 is a key price level to watch here. Let me draw that in there and see what we get here. So that's what we need to get above in order to see a move to the upside. So sideways for MasterCard. Not willing to say sideways up. Netflix. Finding support once again at 61, 62-ish. Getting some sideways price action, sideways to down on Netflix. And finally, Priceline. One of our good charts that shown some weakness of late, trying to find support at the 624, 625 price level. We did get back into this range, 625 up to 680. So sideways on Priceline. So our leaders are pretty much showing us sideways, a couple sideways to up, a couple sideways to down. Again, as we're in the summer months, what's going to be our catalyst to get some type of trending, or do you need to start looking at some reversal trades, taking advantage of the channeling stocks? As we come to our education spotlight, we're going to continue to talk about our emotions and how to develop our edge. And you can see here that ignoring your emotions can be dangerous to your trading. trading for a couple of reasons. First, you have to understand that you are bringing emotions to your trading, and that those emotions can cloud your vision of the market. Our market is all about seeing a pattern, identifying the pattern, and applying the right opportunity, the right setup, the right trading strategy to that opportunity. If you're bringing emotional baggage into your trading, then it clouds your pattern recognition. It clouds what you're seeing about the market and how you make decisions about the market, how you apply the right strategies to what the opportunity is. So therefore, you'll stay in the trade too long. You may not get into the trade because of your emotional baggage. We all understand that you plan to trade and trade to plan. However, if you don't recognize that you're bringing emotions into your trading, then instead you plan a trade, you know what to look for, but you bring your emotions into the trade and you don't trade the plan, you trade how you feel about the plan. Again, we say this over and over again. It's about backtesting, it's about developing positive expectancy so that you have the psychological capital to enact your plan day after day after day after day. And we can help you do that through our coaching program. As always, we want you to comment, like, and subscribe. This week, we're adding Google to our You Make the Call channel. So we already have an Apple video up there. We have a Facebook video up there. This week, we're going to add Google. And again, give me some comments and feedback. Other stocks that you'd like to see us dedicate a full video on, and we'll do that for you. You know about our resources. We have our one-on-one coaching sessions where we help you develop that trader's mindset so you can recognize what your emotions are about trading and that you can plan to trade and trade a plan and not emotionally trade. We do have our managed forex account where you can put our expertise to work, and we have some tips that we can have you for our stock market traders. But in the end, it's all about you and your emotional stability to trade your plan. We can help you do that. Thanks, guys, and I'll see you next time.